Thank you very much. The BCI story, I would like to convince you of the value proposition in BCI. We're Perth-based in Western Australia, market cap of $75 million. The two major assets in the company is an iron ore royalty that was created a few years ago in the predecessor company that I was CEO of to BCI, and the Mardie salt and potash project. So the valuation story around BCI is very compelling. We have $35 million cash. The cash in the company is not from capital raises or placements or debt or so. We have worked hard in buying tenements, working tenements up, selling the tenements at 3 times purchase value, etc., in the last few years. So the $35 million we've worked up internally in the company. The Iron Valley royalty at last year's average iron ore prices, only the iron ore royalty, is an NPV of $75 million. That is our market cap as we speak, just the iron ore royalty. On the average prices in this calendar year 19, that iron ore royalty is worth $125 million, so significantly above our market cap. That is without even looking at the cash and without looking at our major focus project, the Mardie salt and potash project. So if we use the SOP, the potash peer group companies, to value our Mardie project, that is $100 million today, and we can share those evaluations and benchmarks with you. So adding up the Mardie project, the Iron Valley royalty at last year's prices, and our cash, we should be at least $175 million market cap, which means a 45-cent share price, not the 20-cent share price that we have today. So that is the valuation story around our company. I will briefly step you through some of the assets. Iron Valley is an operating mine. We have a contractor that's built the mine, operating the mine. The contractor paid all the capex, the contractor pays all the opex, and we get a quarterly royalty. We have no exposure to the cost. We only have exposure to the iron ore price. In FY17, we pocketed $18 million EBITDA. This year to date, we are above $6 million already, and the last quarter of this financial year looks to be a cracker of a quarter, so I hope we will be well above $10 million by the end of this financial year. It's still a long life mine. It produces around 8 million tons per year, reasonable quality ore, and currently attracting very good prices. So 12 years of mine life left. The MinRes, our partner, is looking to implement a light rail system that could even increase our royalty further. There's a clause in the contract that will give us a kicker on the royalty if they implement a rail system. The other main focus for the company then, as I said, is our salt and potash project. Salt is a unique story. There is no other listed company in Australia that is a salt, that focus on salt. Rio Tinto is the big owner of multiple salt projects. No one buys a single Rio Tinto share to get access to a salt. So there's no information available about salt, and we are working hard to tell the market about the benefits and the attractiveness of the salt market going forward. So the Mardie project will produce salt as a primary product and will produce SOP as a byproduct, sulfate of potash, a premium fertilizer, as a byproduct. And I will tell you the reasons why we believe the SOP will be the lowest cost sulfate of potash produced anywhere globally from this project. So the salt market, very attractive. Not many people know that anything that you touch around you, the clothes you wear, anything that you touch that's not wood basically contains an element of NaCl, sodium chloride. Sodium chloride is the feedstock for chlorine, for soda ash, for caustic soda. All those things are at the heart of any industrial and consumer product. Glass, paper, textiles, paint, pharmaceuticals, water purification, you name it, and NaCl goes into that. Australia hasn't seen any expansion of their salt for more than 20 years. In that period, India has quadrupled its salt production, and to a large degree, the lower quality Indian salt has suppressed prices over that period. We see a huge increase in the salt demand, and BCI is ready to capitalize on that. The sulfate of potash, as many of you would know, that's a better known commodity. Sulfate of potash, basically you get MOP and SOP. The SOP is a premium fertilizer, and it's used on higher value crops like berries and apples and so on, and cacao, and also coffee, as I've learned recently. There's about only 7 million tons of SOP produced globally every year, and the BCI component of that will be quite small. 100,000 tons from our project will be contributing to that market, the 7 million ton market. What's driving the SOP increase in demand? Increasing Asian middle class needing more and better quality food, and that globally we see a reduction in the arable land available. Less land available, you need better yield from less land, so you need better quality fertilizer, and that is where the SOP fits in. SOP sells at about $500 per ton, so at a very healthy price. BCI forecast our production cost to be only around $200 US, so that means the massive margin on that byproduct that we will generate. So just to give you a flavor of the Madi project, basically how this works, we will pump seawater, natural inexhaustible seawater, can never dry up as what the inland aquifer projects can happen to. So inexhaustible seawater goes through 8 large ponds. That map that you see there is 30 kilometers of mud flats that we will build the ponds on. It goes into salt crystallizers, through a salt plant, and onto a jetty. The key to a salt project, you cannot transport salt by road for longer than 50 kilometers. The margins on salt is too low. You need a jetty right at the salt plant to get it onto the ship, onto the end users, chemical companies in Asia, without road transporting it. Then the water that's remaining in the salt crystallizers get pumped to the SOP crystallizers, and then you produce an SOP fertilizer at the site, and that gets exported from the same jetty. So all in all, it's really a chemical civil engineering project rather than a mining project. It's relatively unique, and there are not many better places globally to build a big project like this remaining. So I will briefly summarize by showing you the NPV8 for the project is more than $600 million US. It will have a 60-year mine life. It will have an IRR of more than 20% over that 60-year period. Most importantly to our existing shareholders, it will have an annual EBITDA of more than 100 million US per year. 100 million US per year for 60 years. That is what makes it highly attractive to our current, very supportive shareholders. I will conclude by saying the investment opportunity for BCI, it's significantly undervalued. Madi is a unique tier 1 type project. BCI is well funded, and our largest shareholder, Kerry Stokes, who is one of the top 5 net worth, high net worth individuals in Australia, is right behind us in terms of the equity that's needed for this project. Thank you very much.
Thank you, Owen.